The tip illusion. How the working class got played. Meet Jimmy. Jimmy works in the service industry. He is a bartender at a busy, mid-tier restaurant in a major American city. His shifts are long. The work is physically exhausting. He spends 8 to 10 hours a day on his feet, dealing with difficult customers, managing inventory, and closing down the bar long after the rest of the city has gone to sleep. Like millions of other Americans in the service and hospitality industry, Jimmy's base hourly wage is incredibly low. He survives almost entirely on the generosity of strangers. He survives on tips. Every night, Jimmy counts his cash, calculates his credit card receipts, and tries to budget for his rent, his groceries, and his car payment. It is a stressful, razor-thin way to live. But recently, Jimmy heard something on the news that gave him an overwhelming sense of relief. He watched as politicians from the highest levels of government stood in front of the cameras and made a massive, highly publicized promise to the American working class. They announced a new piece of landmark legislation. The slogan was simple. It was printed on campaign posters, repeated on every major news network, and celebrated across social media. No tax on tips. For Jimmy, this sounded like life-changing news. He did the math in his head. If the federal government stopped taxing his tip income, he would suddenly have hundreds of extra dollars in his pocket every single month. He could finally build a savings account. He could finally breathe. When the law officially passed, Jimmy and his co-workers celebrated. They believed the system had finally looked out for the little guy. But there is a very dark, very quiet reality hiding behind those political slogans. A reality that relies on the fact that most hard-working Americans do not understand the complex, mechanical language of the United States tax code. By the time tax season rolled around, Jimmy was about to discover a harsh, mechanical truth. The law he was promised, the law that was supposed to save him, was a mathematical illusion. To understand how the working class got completely played, we have to follow Jimmy to the moment of realization. It is April of 2026. The new final regulations from the IRS have just taken effect. Jimmy sits down at his kitchen table with a cup of coffee and opens his official W-2 tax form from his employer. He notices something new. In box 14B, there is a complex string of letters and numbers. It is a new federal classification called a Treasury Tipped Occupation Code. His employer had to spend thousands of dollars upgrading their payroll software just to assign this code to Jimmy's profile. Jimmy logs into his tax preparation software. He inputs his total income, including his hard-earned tips. He clicks the button to claim the highly publicized, no tax on tips, deduction. He waits for his massive refund to calculate. The screen refreshes. Jimmy stares at the number. His federal income tax savings is exactly $0. His tax burden hasn't moved by a single cent. He owes the exact same amount of money he owed the year before. Jimmy is completely confused. He watched the news. He heard the promises. He knows the law passed. So where did the money go? Let's pause for a reality check. According to nonpartisan distributional analysis by leading economic foundations, the bottom 40% of American earners will see an average tax savings of exactly $0 from this law. Furthermore, an estimated one-third of all tipped workers in the United States already fall into an income bracket where they receive absolutely zero benefit from this legislation. How is this mathematically possible? How can you pass a law called, no tax on tips, and not save the average bartender or waitress a single dollar? It all comes down to the deliberate, calculated weaponization of language. When the politicians went on television, they used the word tax as a blanket term. But the United States government does not just collect one type of tax. The new law was explicitly written as an income tax deduction. It was not written as a payroll tax exemption. This is the most critical distinction in modern American finance, and it is the trap that caught millions of workers like Jimmy. Let's look at Jimmy's actual tax math. Jimmy is single. Like every other single taxpayer in America, he is entitled to a standard deduction. For the year we are looking at, let's say the standard deduction is roughly $15,750. This means the federal government automatically forgives the income tax on the first $15,000 Jimmy makes. Because Jimmy works at a mid-tier diner, his total taxable income for the year, after the standard deduction, is incredibly low. In fact, before this new law was even passed, Jimmy already owed $0 in federal income tax. He didn't make enough money to be taxed at that level. So, when the new "no tax on tips" law offered him an additional deduction on his tips, it was mathematically meaningless. You cannot deduct money from a tax bill that is already at zero. A deduction against zero is still zero. But what about the taxes Jimmy actually feels? Every single time Jimmy gets a paycheck, a massive chunk of his money disappears before it ever hits his bank account. But that money is not going toward federal income tax. It is going toward payroll tax. Specifically, Social Security and Medicare, also known as FICA. This is a flat tax of roughly 7.65% that is pulled from every single dollar Jimmy earns, starting with the very first dollar. For the American working class, the payroll tax is the most expensive, heaviest tax burden they carry. And the "no tax on tips" law? It did not touch the payroll tax. It intentionally left the FICA taxes completely intact. Jimmy's tips are still 100% subject to Social Security and Medicare taxes. The government is still taking the exact same slice of his pie. The politicians simply offered him a deduction on a tax he wasn't paying in the first place, while quietly continuing to collect the tax that actually drains his bank account. But the system wasn't designed this way by accident. If the law doesn't help Jimmy, who does it actually help? Meet Marcus. Marcus is also a bartender. But Marcus doesn't work at a mid-tier diner. Marcus works at an ultra-luxury, high-end steakhouse in the financial district of Manhattan. Marcus serves $300 bottles of wine to hedge fund managers. Because of the clientele, Marcus earns well over $100,000 a year in tips alone. Because Marcus makes a six-figure salary, his income blasts right past the standard deduction. Marcus owes a massive amount of federal income tax. When Marcus files his taxes in April, he uses the exact same "no tax on tips" deduction that Jimmy tried to use. But because Marcus actually has a massive federal income tax liability, the deduction works perfectly. It shields up to $25,000 of his income from being taxed. Marcus saves thousands of dollars. The law functioned exactly as the architects designed it to. It provided a highly targeted, incredibly lucrative tax shelter for the highest-earning service workers in the country, while providing an optical illusion of relief for the lowest-earning workers like Jimmy. And to make matters worse, the small business owners are the ones paying the compliance cost. Jimmy's boss, the owner of the diner, doesn't get a tax break. Instead, he has to spend thousands of dollars on new accounting software just to track the Treasury-tipped occupation codes for the IRS. He absorbs a massive new bureaucratic burden, just so his lowest-paid employees can receive a tax deduction worth absolutely nothing. So, what do we do with this information? The story of Jimmy is not just about the service industry. It is a masterclass in how financial systems are marketed to the American public. The goal here is to learn how to read between the lines of economic policy, so you can make informed decisions about your own money. Action step number 1. Understand your true tax burden. Do not let the media or politicians define your financial reality. Pull out your last pay stub and look exactly at where your money is going. Understand the strict difference between federal withholding and FICA payroll taxes. If you fall into a lower tax bracket, realize that massive, headline-grabbing income tax deductions are rarely designed to benefit you. Action step number 2. Watch the mechanics, not the marketing. Whenever a new financial law is passed, ignore the title of the bill. Ignore the campaign slogans. Look for the mechanical triggers. Is it a deduction or an exemption? Is it a tax credit or a tax deferral? In the world of finance, the marketing is always for the masses, but the mechanics are always for the elite. Action step number 3. Protect your purchasing power. If the system is designed to continuously extract value through hidden taxes and inflation, you cannot rely on legislative favors to build wealth. You have to focus on aggressive, self-directed financial education. You have to learn how to acquire assets that appreciate independently of the political cycle. Jimmy is still working at the diner. He still counts his cash at the end of a long, exhausting shift. He still smiles at his customers, hoping for a generous tip to help cover the rising cost of his rent. The political campaigns have moved on to the next big promise. The news cycle has found a new slogan to broadcast. But deep inside the machinery of the American economy, the math never changed. The illusion was perfect. The working class cheered for a victory that was never actually theirs. They sold Jimmy a promise. But they kept the money.